Time now for our ETF Spotlight. Take a look at the new Communications Select Spider Funds, ticker XLC. The new fund made up of some of the biggest names in tech and media, including Facebook, Alphabet, Netflix, joining some telecommunications stocks. Joining us now to discuss this new ETF and the index shift that it's based on is Andrew McOrmond. He's Managing Director of ETF Trading Solutions at WallachBeth Capital. Andrew, good to see you.
Hi, yeah, it's good to see you too.
Let's just get the basics out of the way. So S&P indexes is making this shift. They're taking stocks from the technology sector, from the consumer discretionary sector, putting internet and media stocks together with telecom. And what do we have left?
Correct. Well, I think it's an absolutely huge shift in ETFs. And it's kind of a showing that the old guard of what we think is tech is changing to what the youth, the millennials, their eventual children use to communicate with each other, and then how it merged with tech as we know it. No different than how T-Mobile with Netflix, right? And those are the kind of things we're going to see happening. And those sectors are so established. So for S&P to change that and then select sector spiders to come out with a product is absolutely huge. I think it's going to garner a lot of assets.
So there is a rationale, kind of an intellectual rationale behind saying, look, this is now communications, it's telecom, it's internet, it's media. But functionally, as an ETF investor, it's going to mean a lot of capital swinging from one sector to the other, right? Technology is going to be a much smaller weighting. What actually has to happen to affect this change? Correct.
Well, there's going to be changes in XLK and XLY. September 21st, there'll be a reconstitution of the index where we'll see Twitter and Netflix come over. But with any good idea, the reason why I said there's two reasons why I think this will be successful. Obviously, rebranding the sector will be important. But when you talk about where the money is going to come from, if I was to launch this idea with a couple of partners, it doesn't mean that it would take off. The fact that select sector spiders is doing it, right? So you're talking about over $100 billion in assets in these 11 sectors combined, or 10. This is going to be the 11th, right? And they're used by the biggest institutions in the United States. Insurance companies like USAA use it. Large asset managers, guests of your show like Stadion and Horizon, they use these products to reflect their view. Now, there isn't currently a sector, until this was launched last week, that reflects that view. And that's where I think the money will go. I mean, it will technically stay in that family, but you'll have to view it differently. Qs, or even broad-based index investing, is a large view. You will be getting Michael Dell's new company, right, when that comes out. But that doesn't mean what's going on with Facebook and Twitter has anything to do with chips and things that go on in Asia and supply and demand. So it's a really acute way to play it, but I think one that the public's wanted.
It's also going to reduce cosmetically the S&P 500's overall weighting in technology, but it's still going to be the same businesses that drive the index. One quick wrinkle, the telecom sector as it is right now is really only three stocks dominated by AT&T and Verizon.
Right.
A lot of dividend yield investors focus on that. This is going to really change the complexion of what has been telecom.
For sure, and you'll have to then, if you want to stay in just telecom, you will have to shift out to a telecom sector specifically and they have those products, or even just picking the four stocks and doing a basket yourself, because obviously these growth media companies will not have the same dividends.
Andrew, thank you very much
for
mapping that out for us. Andrew McOrmond.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.